got that question across in the conversation we had with the Chief Economic Advisor, Anantha Nageswaran. Just earlier this evening, we were speaking to him, and he's explained and broken down for us the nitty-gritties of the economic survey just ahead of the budget. Here's his response.
India remains on strong foot with demand, structural reforms and investments, and economic survey do project that in the higher end case scenario, 6.8% GDP growth is possible in FY26. I have with me the architect of economic survey himself, Chief Economic Advisor of India, Mr. Anantha Nageswaran. Mr. Nageswaran, welcome to ET Now. My first question to you will be, is there a scope of overperforming? I mean to say, is 7+% growth possible in FY26?
Yes, indeed, it is possible. It all depends on the speed with which some of the global factors play out, and also whether any significant spillover happens from global financial markets, etc. And of course, as always, the monsoon will be critical as well, and the speed with which private sector is able to look at hiring and compensation practices afresh. And if the deregulation agenda also gathers momentum, it will also influence sentiment in a positive way, leading to more investments and more hiring, etc. So I think there is scope for this number to be exceeded in reality in FY26.
I may ask you, what are the risks for this kind of projection?
No, the risk factor I did mention in the course of my answer to your earlier question. For example, if there is a spillover from global market correction onto Indian markets, if the correction is significant and prolonged, and we even have a box item examining these aspects in Chapter 2 of the economic survey, that is one risk factor. Of course, the other risk factor, once again, can be what happens to the monsoons, etc., and also whether hiring and compensation, etc., in the private sector continue to sort of lag behind profitability growth. So those are all the risk factors that can make this estimate come towards the lower end of the range rather than towards the upper end of the range, or even better than that.
Right. You also spoke about deregulation. Now, that is something which you have called out for. Can you explain that, how that will help not only in growth but also in reforms?
No, deregulation is a reform in itself. It is basically, as I explained in my press conference as well in the presentation, these are all not big ticket deregulation that we have in mind. It's all about the nuts and bolts of regulation, which happen on a daily basis at the local government level, at the state government level, on micro, small and medium enterprises. And they are the ones who don't have the time and the mental and the resource bandwidth to be able to deal with them. And once those are addressed and the cost of doing business comes down, they themselves can grow, generate employment, and we link it to the aspiration that India has in terms of boosting the manufacturing share of GDP. And that can happen only if we have a vibrant SME sector, which we call in the German language, it is called the Mittelstand. And for that, deregulation is an important tool, policy nudge or tool that we can actually deploy, which will address many aspects: manufacturing share of GDP, employment generation, income growth, consumption. All these things can be done by basically pulling back from micromanaging and imposing extensive compliance requirements on businesses, particularly small and medium enterprises.
Right. You also spoke about augmenting internal capacities for growth. Now, this is something which India would like to bank upon. Can you explain a bit this point?
Sure. I think we did explain that in the press conference quite a bit. We are doing quite well in terms of augmenting our physical infrastructure. We have given several examples in the economic survey, whether it is with respect to public transportation network, the railway network, highways network, power generation capacity, number of airports, port handling capacity, etc. These are all the ways in which we are augmenting our physical infrastructure capability. But we also speak about the need to augment internal capacities with respect to agriculture, with respect to education and skilling, and also with respect to even soft factors like making sure that the mental health and emotional health of the Indian youth is maintained at a good level so that their productivity will not be impacted, because that will have an implication for economic output. So internal capacity being augmented must happen at several levels in several sectors and in several areas as well. And that is what the survey gets into in terms of depth in various chapters.
You talk about RBI's monetary policy as well, and you have mentioned that it remains balanced while maintaining the price stability and also balancing the supporting the growth. Now, Reserve Bank of India will of course take a call on rates next week. But I want to understand one factor which has acted like a villain has been the vegetable prices and pulses, which has also been mentioned in the economic survey. Do you think there is a call for cutting rates by several parts of the industry? And globally also you have seen that few of the central banks have taken a call. How do you think it will be a villain or a problem for Reserve Bank of India?
Ankur, I think I have not commented on monetary policy per se in the economic survey, and nor do I want to front run or prejudge what the central bank should do next week in their monetary policy meeting. That is not my remit.
No, I was not saying to comment on monetary policy. What I was talking about the vegetable and pulses, and you did mention in the economic survey that globally central banks have adopted a different strategy for viewing the situation which is there. So hence I wanted your view on how India should look at this situation.
Look, the vegetable prices are indeed coming off the peaks which we saw earlier in 2024. And we also given the information and the charts in the economic survey on how excluding the prices of a select commodities or pulses and vegetables, the inflation rate is extremely well behaved. And in the July survey, we had a discussion on whether monetary policy indeed is the right tool to be able to control prices of food items, etc. So there is nothing more to add to that kind of discussion which we triggered with our July 2024 economic survey.
Right. You also mentioned about the energy transition, the India way. Now, this is something which has got attention from all the global stakeholders, and even people are looking at India. I want to understand that what is your view and what do you want to focus on this?
Well, that's what the survey says. Basically, the energy transition is something that we need to focus both on the supply side and the demand side. That is one. And second, energy transition doesn't mean only renewable energy, and that too, renewable energy does not mean only solar and wind. It also should involve nuclear energy. The third dimension we want to focus on is that we need to build internal capabilities, an internal supply chain. Otherwise, there is a risk of single source concentration. And therefore, India needs to move on the energy transition at its own pace rather than being dictated to by global forces and global factors. The fourth dimension is that India has to concentrate on adaptation financing, adaptation efforts much more than emission mitigation. These are the elements we emphasize in the economic survey with respect to energy transition.
Right. One interesting thing which caught my attention was AI and labor market. Now, this is also something which has got an interest from all the stakeholders and especially job seekers and also who are giving jobs. I want to understand that how that balance can be made. Now, this is something which everybody is saying that future technology, but how India should go about it.
Well, I mean, that's what the chapter deals with, which is basically saying that historically industrial revolutions have caused dislocations, and countries have to create institutions to be able to take care of the labor impact and prepare the workforce to be able to adapt and assimilate the technology and be able to contribute more productively with that. That is on the part of workforce. But on the part of employers, they need to find the right balance. And this problem is there not just for India, but for multiple countries. But only that in the case of India, the numbers are much larger. And therefore, companies have to be extra conscious about how are they going to deal with the introduction of technology and its implications for the workforce, maybe find ways to redeploy them elsewhere, prepare them in advance and train them, and maybe grow the business in different areas so that the surplus labor in one area can be absorbed in another. It is just about raising the level of consciousness and social responsibility in terms of introducing technology, particularly in a labor-rich country like India.
Yeah, one last question before I let you go. You have mentioned about China's dominance in global manufacturing landscape. How we should get it away with?
Look, this is a reality, and they have spent 30, 35 years building their presence in most areas. And that is what we are already trying to do in terms of our own Atmanirbhar Bharat programs, production-linked incentive schemes, etc., which are bearing fruit in several areas: electronics, consumer durables, white goods, pharmaceuticals and textiles, etc. And this is an effort that we need to continue, maybe redouble or invest more in some areas, etc. But this is a long-term issue challenge, which again applies to several countries, not just to India. We just need to keep working on the directions in which we have been moving in the last several years.
Thank you so much for taking out time. Thank you for connecting with us.